Hi there, welcome to Kneppy Invest and welcome to August 19, 2024. We have about 1 hour left of normal trading today. In fact, it's right on 1 hour in 7 seconds. That does not include the 10-minute closing auction. So technically we have about 1 hour and 10 minutes left of trading today. So time is right on 3 p.m. right now. And if I had a word to describe today, I would say flat as a pancake. And pancakes are on my mind because I had pancakes for lunch, and hopefully you can't see a maple syrup stain right there. And although technically 0.01% is not flat as a pancake, because 0% will be flat as a pancake, but pancakes are on my mind. And today's been, who knows? It's up a little bit, down a little bit. And when I say up a little bit, down a little bit, I'm talking about the ASX 200 and the All Ords. They've been down and up, down and up. Small caps have been up for most of the day. Tech has been up for most of the day, and resources has been down for most of the day. Now, even though the market has had an okay day today, we'll say day today, and even though August is my favorite month of the year because it is reporting season, we are seeing quite a few companies release their reports, and talk about this in a second. I might actually consider August 19, 2024 to be my favorite August day of this particular reporting season or this particular reporting month, because I received a free book from Amazon, and this book is worth $150. So how did I get this free book? No prizes, nothing like that. I received this free book because I ordered it well over 1 month ago. Don't know why I paid $150 for it, but I just did. I just wanted to read it. And then the book got lost in transit all the way from the United States. And Amazon sent me a message, I think it was last week, saying, "Oh, I'm sorry, but we have lost your book. We're going to speak to a courier about this. It's their fault, not our fault. Would you like a refund?" And I said, "Well, of course I would like a refund if I'm not going to get the book. That's ridiculous. You have to even ask me that question." And they said, "Okay, we'll give you the refund right now." And then they also mentioned to me, "But if you do receive the book, you can just keep it." And I went, "Ooh, potential free book." Now, I thought maybe there was that chance or remained lost. Maybe someone stole it, that sort of thing. And then today I went to the Amazon website and said, "Well, it's been delivered." And it was delivered. The book is called Technical Analysis using multiple timeframes, Understand Market Structure and Profit from Trend Alignment by Brian Shannon. It's not very big. It's also hard cover. That's probably why it costs $150. Printed in Canada. There you go. So I'm going to have a look at that book over the next few weeks. Maybe I'll get something out of it, but it's free. So even if I don't get something out of it, I'm okay with that. Okay, so August is my favorite month of the year because it is reporting season. So some of the companies that did report today include A2 Milk, Ampol, BlueScope, Lendlease, Nuix, Iris, Suncorp, Reece, Audinate, and Media. Tomorrow is actually a fairly boring day when I went through this list earlier. But today is about Monday, 19th of August. And a few of these companies are either up big or down big based off these results. A few surprises in there as well. And these companies make up most of the top 5 stocks of the day. So I'll talk about the top 5 stocks of the day later in the video, and you might probably know which companies are already going to make it based off the movements in their share price. 3 of these companies' share prices, last time I looked, were up by over 10%. One was up by 25%, and one company was down almost 20%. But I'll talk about those 3 companies later in the video when I talk about the top 5 stocks of the day. Few other interesting announcements that I do want to discuss as well that were not financial report related. So those companies are Control Bionics, Australian Vintage, and Booktopia. So I'll talk about those companies. One of those companies actually did make it in my top 5 stocks of the day. Okay, no tweets today. But first, what I'm going to do is go through the ASX today. Look at the best and worst performing sectors, indices, and also companies. So let's do that right now. And I'm just going to update this just to see if it's still remaining. Yeah, it's still flat as a pancake. A little bit of volatility in there. When I say a little bit, I mean a little bit. It's sort of the market or the XJO and the All Ords is sort of oscillating above and below 0% over the past maybe hour or so. Okay, let's have a look at the best and worst performing sectors. Utilities is up 1.74%. Financials, healthcare, both up around about 0.5%. Not surprised with financials because of Westpac. I am assuming Westpac has had a good day today. They released their third quarter numbers, and they were better than CBA's numbers. So I wouldn't be surprised to see Westpac share price up, and that could have helped the other banks up as well. Healthcare has an okay day today. Telecommunications relatively flat, IT flat, and staples down 0.94%. And discretionary down as well. I'm assuming, and this is me making another assumption, which sometimes can be a bad thing to do. Making assumptions, there's that saying, can make an ass out of you and me. I'm just assuming the reason staples is down is because of A2 Milk. And A2 Milk did release their results, and share price of that company is down a fair bit. But first, utilities. Why has utilities had a good day? Let's have a look. By market cap, Origin's had a good day. Mercury New Zealand and AGL have all had good days. That's probably the reason why. And staples, so we have Woolworths, A2 Milk. I'm assuming A2 Milk is down a fair bit. Let's have a look. By market cap. So Woolworths down a little bit, Coles up a little bit, Treasury Wine down, but there's A2 Milk down 19%. And I'm just assuming that the reason consumer staples is down as a sector is maybe not solely because of A2 Milk, but it definitely has not helped. Otherwise, if we look at the indices, not surprised gold has had a good day, almost up 2%. This is on the back of a nice little rally in gold after our markets had closed on a Friday. So that's not a surprise at all. And no real big surprises in the rest. ASX 20 up 0.04%. I am going to guess, I probably technically should say 10 companies up, 10 companies down. I'm going to mix it up. I'm going to say 9 companies up, 10 down, and 1 flat. Oh, did I get that right? Did I get that 4 and rising the right way? I'm not sure. I can't remember. I'm going to say I got that right, and there's a chance I completely mixed that up. But 10 down, 1 flat, and 9 up. So at least I was on the right track, even if I got it wrong. And let's have a look at the best performing companies in the ASX 20. No, and it's Westpac. I'm not surprised with that. They did release their quarterly numbers, and I thought, this is okay compared to CBA. REA Group's had a good day. NAB, yeah, I think Westpac has helped NAB. Woodside, CSL, ANZ, and Coles. Worst performing companies, WiseTech, Fortescue, Goodman Group, Wesfarmers, BHP, Transurban, Macquarie Group, and Rio. So more weakness in iron ore. There you go. Okay, so let's have a look at the worst and best performing companies on the ASX today. We'll start off with the top gainers. Top gainers, let's have a look. Larvotto Resources up 50%. I don't remember this company releasing anything, but I could have just missed it. Completely missed it. This is it. Larvotto Resources Limited Price Volume Movement. What the hell is that sort of... I've never seen this sort of announcement for Larvotto Price Volume Movement. China imposes export controls on antimony from September 15 due to national security concerns. Okay. Oh, they explaining why there's a significant increase in the share price and significantly above average trading volume. So this is like a ASX price query, but the ASX didn't even give Larvotto price query. Larvotto is just getting ahead of probably an announcement or a sort of like a request from the ASX. So Larvotto is on top of it, and something to do with antimony in China. Let's have a look at the chart for Larvotto. LRV. And the share price has really rallied the last few days. So on Friday, it was up 44%. Today, up 47%. So obviously that announcement was because of last week. This is actually a nice looking chart for Larvotto. So some traders or some experts or maybe some really savvy investors are totally on top of Larvotto Resources, on top of antimony, on top of China. I completely missed it not over the top of my head, but I completely missed this trade. But the chart looks, before this 2-day increase in share price, the chart actually looked pretty good. Go Lavoto Resources. And if you're on top of it and made some nice profits, good for you. Well done. CareTech up 41.67% on pretty low turnover. But you know what's not on low turnover? Nuix up 27%. And yes, Nuix is the top stock of the day. I will always put a company whose share price has risen 27% on the back of their financial results in at number one, unless another company performed or did worse. Control Bionics. I'm really happy to see that company up 26% on fairly low turnover. But I do like what this company is doing. And also the chart looks pretty good. So I have put Control Bionics in number 5 on my top 5 stocks of the day. Otherwise, nothing else here. Nothing else that has triggered any sort of memory in my brain. Now let's have a look by market cap. Resolute Mining, WA1 Resources. Why is Resolute up? Did they release anything today? I don't remember them releasing anything. Nothing. It's just gold. Is that just because gold's had a good day? WA1 Resources. Audinate up 16%. What's going on with Audinate? This is not noise. This is on the back of the company releasing their results. But I thought they've already announced what their results were going to be like last week. And now for some reason, share price is rallying. I just don't understand the market sometimes. But Audinate is in my top 5 stocks a day because it's up 16%. Quite a few other gold companies here, which is not a surprise. Pantoro, few viewers like that company. Can't really blame them for that. And that's it. Synlait Milk's up again. Okay, so let's have a look at the worst performing companies today. And we have quite a few companies on fairly low turnover, Panther Metals and Zambull Group. Let's completely ignore both those companies because I'm going to say right now, A2 Milk is the worst performing company on the ASX today, down 19%. And I'm not completely surprised by that. And I'll talk about why later in the video. Otherwise, nothing else here. You might completely disagree with me and say there's a lot here, but nothing else here that I want to discuss. Now let's have a look by market cap. A2 Milk, Guzmani Gomez down 7%. Share price is now above $30, which is a little bit of a surprise. Bisalloy still down 9%. I do know Bluescape still did release their half-year or full-year reports. Maybe it was a half-year report. But I didn't see the share price move a lot. Down 3.73%. I don't think Bisalloy Steel released anything today, did they? No, nothing. Is that just noise? I don't know. I'm going to have a look at the Bisalloy chart because the chart for that company has been looking good. Otherwise, Silver Mine's down again. I keep getting a comment. Who wrote this comment? James YU1D, Silver, whatever it's called. What's it called? Where is it? Silver Mines. Oh no, he's saying something completely different. ASL, the best silver stock. That's completely different. Okay. Okay. And what else is here? That's it. EZZ, just a bit of noise. They were up a fair bit the other day, now down a fair bit, so that's just noise. When you're up a lot one day and then down a little bit the next day, that's just profit taking and noise. Anyway, so let's get to the top 5 stocks of the day. A few of these I didn't go into too much depth, and we're going to start with Control Bionics because the share price was up a fair bit last time I looked. Still up about 20%, give or take a little bit. Share price has been as high as 9.7 cents today. Now it's at 9.1. The company released an announcement today, new US insurance code approved. Now, I'll be honest with you, when I saw the title of this announcement, I just moved on to the next announcement. But then I saw the share price and the market reaction. I went, oh, I should have a look at this particular announcement. And it is favorable for Control Bionics. Now, Control Bionics is a sort of company we want to succeed. Now, if you don't want this company to succeed, there is a possibility you are a psychopath because this company, if their technology is successful, will help out a lot of people who need a little bit of help. So they control stuff or technology that help people with motor neuron disease, MND, and another one called amyotrophic lateral sclerosis, or ALS. So MND and ALS. I'm pretty sure they have like what do you call it? Wheelchairs, autonomous wheelchairs, and that sort of thing. In fact, I actually did mention down below. Recently extended its offering to mobility with the launch of Drove, the autonomous wheelchair module. Drove allows powered users to the independence to operate their wheelchairs in their homes for the first time. So we really want this company to succeed, unless, of course, you're a psychopath and you're probably laughing. Anyway, so this company has been on my radar for the last few months, and it seems like it could be on the market's radar as well, because the chart is looking much more interesting. Now, the share price went on a bit of a sideways trajectory from the end of last year all the way through to June, July this year. Then I started to see some increase in volume. Then the company on the 20th of June released an announcement. Share price rallied 32.6%. And we have seen the volume subtly increase since then. Not only that, we started to see the share price rise as well. Share price is just shy of 10 cents, which is an important level. So just based off the chart, based off this particular announcement, and they do mention this is going to be beneficial for the company. So let's have a look what they say, because I completely missed this bit or went past this bit. So once this particular thing, this new insurance code is approved or becomes effective on the 1st of October 2024, it results in a material benefit to the business operations in the United States, represents a substantial opportunity to build a wholesale distribution model for the US as part of our previously explained neuro-node-only strategy. Control Bionics and any of our existing US partners can, from the 1st of October 2024, apply for the extra $4,300 reimbursement for customers covered by Medicare and Medicaid, and further seek to have this covered in network with private insurers. So I'm going to trust Control Bionics and the management that this is going to significantly help the company moving forward. And that's probably why the share price of this company has risen today. But I think there was always or already some positive momentum behind the company before this announcement. I think this has just helped it along its way. So a nice looking chart for Control Bionics. The market cap of this company is not too high. We're talking about maybe 20, 25 million. Let's have a look. Actually, in fact, it's just below $20 million at 9.5 cents. So at 9.1 cents, it's probably more like 18 or 17 million. So a nice announcement from Control Bionics and a nice little market reaction as well. And because I want this company to succeed, I had to put it into the top 5 stocks today. And probably the other reason is I couldn't find another company that was worthy of this position. The other company I was thinking of putting in number 5 was MyState. They did release their results and also doing, or I wouldn't say doing, they are also merging with another bank. So MyState has banks, I think in Tasmania, Victoria, and they're merging with Auswide, which mostly have banks in Queensland. So I think the combined entity will be much better, bigger. I think a bigger bank is better than a smaller bank. That's just my opinion. Okay. I don't have to discuss either of those companies anymore because I've already discussed them. Okay, so let's get to company number 5, and this is Reece. Reece down 4.82%. They released their results today, and I'm a little bit surprised that share price is not down even more. This company has, let's have a look at FinChat. This company has a P ratio, right? Has a P ratio of, I'd say 40. Yeah, 39.35. That's before today. And not much growth. So, well, that's not completely right. The earnings per share growth over the last 10 years is 10.2% per year. So actually nice growth over the past 10 years, but this growth has been slowing a little bit. So revenue growth over the last 3 years is 13.5%. Over the last 10 years, it's 18.8%. Now, with a P ratio of 39.35, you really want some significant growth. So I was expecting some pretty good growth. And the reason I was expecting it is because I just thought the market was expecting it. But I could be completely wrong. And maybe the market didn't think there was going to be any growth in this company this year, but maybe it's next year. But when I looked at these numbers, I went, oh, these are not that exciting. Sales up 3%, or revenue. Adjusted EBITDA up 5%. Adjusted EBIT up 2%. Statutory NPAT up 8%. Adjusted NPAT, which is the better number to look at, up 3%. Adjusted earnings per share up 3% to 64 cents. Oh yeah, so 64 cents. What was the share price? 64 cents. So 24.80 divided by 64 cents. The P/E ratio of this company is currently 40 based off these numbers, the adjusted earnings per share and also the share price right now. And on the back of this sort of growth, I'm just like, what's happening? Why has this company such a high P/E ratio? Now, Reece Group, if you have a look at their about section, if they do have an about section, they are sort of like, how would you describe Reece Group? How would you describe Reece Group? I actually don't know because I have never had a look at this company before. I would say they provide stuff for houses. So I'm not sure what exactly. For some reason, I'm thinking bathrooms and stuff like that. But I'm just going to have a quick look at their presentation. I'm hoping they have an about section here. Here we go. Leading distributor of plumbing, waterworks, and HVAC products to commercial and residential customers. So in the right sort of area, but plumbing, waterworks. So that's sort of bathroom. Yeah. Okay. So I don't really have to have a look at their presentation or anything. They have an outlook. So looking ahead, we expect the near term to remain challenging in both regions. So this is probably Australia and US. Over the long term, fundamentals in our sector remain positive, with demand for housing infrastructure supported by long-term structural factors in our region. So no numbers given for next year. And I'm just wondering, why is the P/E ratio of this company so high? Why has the market really, why is the market buying this company for premium? And that's probably the best way to say they're buying this company at a premium. P/E ratio of 40 with fairly tepid growth. This is the chart for the company. Now, back in February, the share price rallied on the back of their results, up 18.3% on the 27th of February. And even then, I was like, I don't know why. I was actually questioning it why. And the share price since then has just gone sideways. In fact, you could actually say or argue share price has pulled back a little bit. So this is definitely the sort of announcement where I was like, I don't understand what the market is seeing in this company at a P/E ratio of 40. If the P/E ratio of this company was like 15, yes, okay, that's fine. But 40, it's I don't know. This is a strange one. I'd love to hear your opinion if you are a shareholder of this company. And I'm not shocked to see the share price down. In fact, I did expect the share price to be down a fair bit. Director appointment and resignation, that's interesting in itself. Maybe I am missing something. I don't know. Maybe there is something else that I'm missing. Maybe that profit is, in fact, I could see that right now. I'm going to have a look at the profit. So this is the profit of the company, nice rise. So this is exactly what you want to see. You want to see rising profit. Last year it was 387.6 million, and this year it's 387.6. Where is it? It's about 419 million. So it's up a little bit, but it's not significant growth. Yeah, it's not significant growth. Actually, this is one that just, I don't know. That's all I can say. I just don't know what the market is seeing with Reece. Anyway, that's coming in number 4. We have Reece Limited. I actually never owned this company before. I've not even traded it. Coming in at number 3, we have Audinate, which is weird to see the share price up 20%. What is the market? You could have, if you bought this company the other day, you could almost be up 100%. So the low the other day when the share price took a massive dive, the 6th of August, was that 10 days ago? 2 weeks ago. Wow. Share price on that day went to a low of $6.50. So not quite up 100%. But yeah, share price up 20% on the back of their results. I don't understand. So if you go back to the 6th of August, they released their preliminary results and the outlook. So technically nothing should have changed since then. 2 weeks, nothing should have changed. So I'm just going to compare, and I have not done this yet. I'm just going to have a compare of their preliminary results and just see if something's changed. Okay, so this is the results. So revenue of 60 million. Yep, exactly the same. EBITDA 19.5 to 20.5. Okay. So first thing here. Their preliminary unaudited results mention they expect EBITDA to be between 19.5 and 20.5. And EBITDA came in at 20.4, towards the top of that particular range. So the market could be thinking right now, well, better than expected because it's near the top of the range. It could have been worse. It could have been worse. Gross margins, 74.3%, right bang on. Profit of 12.1 million. They actually don't mention the profit here at all. And they don't mention the profit at all. Anyway, so we'll just assume that those numbers are fairly similar. And the outlook, I doubt the outlook has changed because 2 weeks ago, things have not changed in 2 weeks. So let's have a look at the outlook before somewhere. Here's the outlook. And this was from their 19th of August. No, today's the 19th of August. This is outlook from the... Oh, they didn't give any profit guidance in the unaudited results. Okay, so I'm looking at the actual results here with profit. For some reason, I had it mixed up. So profit of 12.1 million. Positive free cash flow of 6.9 million. 11.2 million better than financial year 23. Cash and term deposits of 117 million. Let's have a look at the outlook. See if anything's changed here. Now, if they did not release that announcement on August the 6th, possibly the market might not have reacted that badly. Or maybe it's, maybe the market, maybe today is proving the market completely overreacted on 2 weeks ago. Okay, so they're still in their outlook saying things are weakening. Softer expected numbers in financial year 25. Audinate expects to generate US gross profit marginally lower than financial year 24, and there will be likely a decline in revenue in financial year 25. I'm pretty sure they said exactly that same thing in August the 6th announcement. I'm pretty sure that's what they said. Yeah, so a really interesting reaction from the market. Have a look at the chart. The share price is not getting back up to the levels it was before the drop, but the day before the share price dropped, the share price closed at $13.32. Now the share price is $11.25. Really interesting reaction from the market today. I find this bizarre. So this is probably one of the most bizarre things I've seen on the market. And I still remember one of the Ausbies core analysis saying Audinate was a sell, probably on the day they released that bad result. Maybe I've got my timelines a little bit mixed up. But yeah, this is weird. I don't think anything has changed. It just shows you the market sometimes can be fickle. And maybe just because the EBITDA was towards the top of the range, expected range, that's all it needed for the share price to be up 20.32%. Bizarre. If I knew the market was going to be this weird, I would have bought some shares or added to my holding anyway. So that's Audinate coming in at number 3. And the reason it hasn't come in at number 2 is because A2 Milk has had a bad day, down 19.3%. There was a little bit of a comment here, just noticed, from David Reece. Hello, Kneppy. A2 has had a bad or awful day today. I couldn't see where or were the report was that bad, not setting the world ablaze. But was it that bad? All right, couple of things. What can drive the share price of a company down like this could be something as simple as missed numbers. If these results weren't or didn't meet expectations, that could drive the share price down, or the outlook. If the outlook is weaker than expected, that could drive the share price down as well. Now, I actually did, when the company, or I looked at the results, I actually did a DCF and a reverse DCF, also tweeted this as well. And based off my, in fact, I'm going to open up my Twitter because I don't want to make any differing opinions or different thoughts. All right, so A2 Milk down 20% on release of financial year 24 results. Based off results, company would have to be trading on a P of about 30. So P ratio, this is P ratio of 30 was at the share price at the end of closing on Friday, not at the share price. Now, I think I mentioned that in the next, I actually did reply to myself. With mid-single realized and expected growth, that is just too high of a valuation. And I did a DCF or reverse DCF, and I got growth should be between 15 and 20% to justify current valuations. And that's important because in their outlook section, they did mention mid-single-digit growth expected in financial year 25. Now, with the share price dropping 20% to $5.50, so now it's $5.66. PE lowers to about 24. So this drop in share price could be simply because the market has seen the numbers. They looked at the outlook and went, this company's a little bit too expensive at current levels. So I did a quick DCF with generous future growth. So I said, let's just assume that the actual growth in the company actually increases in the next few years. And I got a valuation of just under $5. In fact, it was $4.97. Now, I don't say, or would not say, that's the real value, or that should be the valuation of this company right now, because I made some assumptions and I very rarely do DCFs. And if I do DCFs, I put in a range of numbers. And if I did a range of numbers, I'd come up with a bit of a range of outcomes. So if I did that with A2 Milk, I probably would have had a range between maybe $2.50 and $6. That can be that sort of range when you do DCFs properly. That's probably another reason I prefer reverse DCFs, because that gives you expected growth, or the growth you need to justify the current valuation. So one of the reasons why the share price of A2 Milk might be down today is the market realizes there is potential. This company could be slightly overvalued at these growth rates. So these growth rates, let's have a look at the, which one should I open up? Media release or Outlook? They've got quite a few announcements today. Okay, which one? Okay, this one's better. It's got a nice little table. All right, so revenue up 5.2%, EBITDA 6.9%, profit 7.7%, earnings per share up 9.2% to 23.2 cents. So I used 23.2 cents in my DCF and reverse DCF. Nice increase in cash. So all these numbers are up by less than 10%. And they also gave Outlook somewhere. Somewhere here, they gave an outlook. So Outlook, at this stage, a company is expecting mid-single-digit revenue growth. So just assume 5% into financial year 25, with growth affected by a few things. Gross margins is expected to be broadly similar to financial year 24. So if they have 5% revenue growth, we should expect 5% profit growth as well, 5% earnings per share growth. Now, they did mention that there are a little bit of headwinds right now for the company, and they expect these headwinds to lighten during financial year 25. But I've heard that before from this company. I have heard that things should brighten up later in the year, and it's never brightened up. So I do take any words or any bit of commentary they say with a grain of salt. So when I did my reverse DCF and my DCF, I was a little bit generous and gave them nice growth. So I think I gave them like 8% growth moving forward in their profits or earnings per share. And that's how I came up with that number. It was 8%. Could have been something, yeah, it was about 8%. Anyway, so there's a myriad of reasons and numerous reasons why the share price could be down. But the market has spoken. Not only has the market spoken, I think the market did overreact on open. Share price fell to $5.30. You can see it down there. It bounced off a nice little support level. This dotted line is support level. It bounced off it almost perfectly. And yeah, so the uptrend in A2 Milk, I think, has come to an end. And we haven't seen a major rally in the company share price today. So unfortunately, a bad day for A2 Milk. And if I saw the share price getting below $5, definitely below $4, I would become way more interested in this company just for valuation reasons. That's it. Hopefully you can't hear my dog snoring in the background, but she's asleep next to me and she is having a pretty good dream. Well, I suppose snoring has nothing to do with dreams, but she was twitching. Anyway, so that's A2 Milk coming in at number 2. And fortunately for A2 Milk, it probably would have been the top stock of the day for the wrong reasons, but Nuix. Can't put Nuix anywhere else other than number 1. When the share price rallies 26% on the back of your financial year results, that is an amazing rally in the share price. What else is there to say? I probably could argue that the market is getting a little bit too excited about Nuix right now. Now, sure, there was nice growth, and sure, this company has turned things around. You can just see this by this little table. So everything is up really nicely. Revenue up 20.9%, underlying EBITDA up 38.7%, statutory EBITDA up 60.2%, statutory profit, well, it's gone from negative to a positive. I probably would like that profit to be a little bit more. Underlying cash flow, 24.7 million, up 171%. And overall free cash flow, it's gone from a negative 13 million to positive $12 million. Now, I did have a quick look at the company's, where is it? Preliminary final report. And the main reason I just wanted to have a look at the cash flow statement. There's one reason I want to have a look at the cash flow statement is I just wanted to see what the cash flow was, the free cash flow was. And the reason behind that is because this company would be capitalizing quite a few of their software development. In fact, they do put that in their cash flows from investing activities. So this company's operating cash flow is $50.3 million. So it's pretty nice operating cash flow. However, they spent $32.4 million on the payment for software development costs. That's a real cost. That's an ongoing yearly cost. So I'm always going to take that into consideration. So their free cash flow, in my opinion, for this particular year was around about $18 million. But that does not include lease liabilities, which is also a real cost. So if you want to include lease liabilities, that means the free cash flow of this company would be more like $15 million. And in fact, their announcement, they did mention it a little bit differently. So $15 million free cash flow, they said, what was it, $12 million? They said the free cash flow was $12 million. So there's a little bit of difference between my calculation of their free cash flow and their own calculation. So they were a little bit more conservative. So maybe they included the acquisition or the payments of consideration of Topos Labs. I don't know. I'd love to see that. I haven't looked at the presentation. And overall, the cash on hand has increased. So there are things to like about this company and these results. The company is turning things around. I do think that company has tailwinds behind it, but the valuation, that's what's getting me. So this company now has a markup, 700 million, 1.44 billion. Okay, I was way off. 1.44 billion. That is what I'm looking at going, I don't know. Now, I am trading this, and I think I'm up about 64%. So I bought Nuix. Let's have a look at the chart. I can tell you exactly when I bought Nuix because I put it down here. So I bought Nuix at $2.94. So it's up about, it's over 50% now. Yeah. And valuation matters. Even for charts like this, when the share price has risen a fair bit, valuation matters. And I'm just thinking, markup of 1.44 billion with these sort of numbers, this company has going to have to experience significant growth in the next few years to justify the current valuation. So that's the one little problem I do have with Nuix right now is just the valuation. But you can't complain with the share price rising at 26.8%, 26.1%. I'm not going to complain right now. I'm just going to ride the trend, ride the enthusiasm, ride the positive sentiment behind this company right now. And when the sentiment starts to shift, that's when I might take my profits. Okay, so that's Nuix coming in at number 1, the top stock of the day. Have a little bit more time on my hands, so I could go through some of these other announcements. Okay, non-financial statements or financial reports. Let's start off with Booktopia has been bought out. Out of administration. Well, the administrators have announced that they have sold the Booktopia business. The main thing for shareholders is will they get any money? Unfortunately, the answer to that is no. And the administrators, let's say this right at the end, the sale price would not be sufficient to provide for a return to shareholders. Sorry, you've lost your money. That's what they're saying. Sorry, no, you're last in the line of people who might get some money from this sale, and you're not going to get anything. All the creditors, debtors, all that sort of thing, get the money first. Is that a thing? Debtors, creditors? I don't know. So that's Booktopia. Leaving the ASX soon. It's been a disaster since they listed late 2020. Maybe it was 2019. I can't remember. Another company that released something interesting today, and the reason I'm thinking interesting is because Australian Vintage was sort of someone shared this company. And I had a look at the company and went, this could be cheap, but there were significant red flags. And today they released an announcement, change in board strategy. And this is interesting because board renewal results in change in strategy, improving free cash flow and return on capital employed over the next 3 years, impairment of assets. The change in strategy is targeting a free cash flow of $20 million per annum by the end of financial year 23 and return on capital employed of 8% in the same time frame. Now, the company, I'm pretty sure, does have debt, if I remember correctly. It's a wine company, which I'm not the biggest fans of because things can go wrong. Who knows? But minimum of $20 million per annum in free cash flow for a company with a markup, I think it's pretty low. Last time I looked, markup of 52.71 million, but it does have debt. I'm pretty sure it has debt. I can't remember how much debt because my memory is horrible. Let's have a look at the most recent financial results. You have to go to the 1 year half-year accounts. So I'm pretty sure you can't use that that markup and say, oh, this company will be trading on 3 times free cash flow in a few years, because you have to take the debt into account. So let's have a look at the balance sheet. Company has $77.5 million of debt in non-current liabilities and a few lease liabilities. So the enterprise value of this company is roughly $120 to $130 million, which means if they do generate $20 million of free cash flow, this would mean the company is trading on about 6 times free cash flow, which is actually pretty good. It's pretty good. So if they can get to or achieve their goals, I could argue that this company is cheap at current levels. The question there is if they achieve their goals. Other companies that released their results today, let's have a look at just the charts. We had Ampol. Ampol, not a good day for Ampol. Not a good day for the chart. Share price down 4.2%. Possibly, oh no, I was going to say maybe the share price is getting towards a support level, but no. I did actually have a look at the commentary. It's interesting because if you have a look at the commentary, and I was not going to do this for this company. This is the half-year results. Company is actually trading on a P ratio of like 12 or 13, which is not too high. But this is the reason why, a little bit of commentary, reason why this company is not a high-quality company. Because Matt Halliday, the Managing Director and CEO, says, Ampol has delivered a resilient performance through a determined focus on the things we can control, which implies there's a lot of things this company can't control. And if the management team of a company can't control things and the financial performance of a company, straight away, that company is not a high-quality company. A high-quality company can control most of the things that lead to the financial performance of the company. So this company has no control over some things, and he's just mentioning the things they can control. They've done a good job, but everything's down. So again, they've done a good job, but all their metrics are down. Hence, there's a lot of things they can't control. So that's should say to you straight away, this is not a high-quality company. We already know that Ampol is not a high-quality company. Who else? Westpac did release some quarterly numbers, and I was like, oh, these are much better than CBA's. So let's have a quick look. So CBA was down, all the numbers were down, but Westpac, net profit up 6%, net interest margins up 3 basis points, the CET1 capital ratio to 12%, return on tangible equity up 79 basis points, core NIM up 2 basis points. So pretty good quarter from Westpac. And in fact, if I compare this particular quarter to CBA, I'll probably go with this one because at least this company had a little bit of growth compared to CBA, who went backwards. I think they did provide a table, yes. Anyway, so not surprised to see the share price of Westpac up, while CBA might be down. Not relatively flat. In the chart for CBA, I was going to put it in there. Why not CBA? No, Westpac, sorry, not CBA. And Westpac today, chart looks pretty good, doesn't it? Would I be buying Westpac? Probably not. Probably not. I'd have to have a look at the P ratio, 17, almost 17, and the price of book's pretty high, or probably pretty high as well. So chart looks pretty good, but valuation again does matter. Suncorp released results, and chart looks okay. Not a breakout. I'm looking for breakouts here. Any sign of breakouts? I would say no. Simon's Group, I'd say no for that one too. Blue Scope Steel. I'm pretty sure the share price was down a fair bit on open and has rallied. Yes, it has rallied a little bit. But again, chart says no, sorry. MyState did release their results today. This is another bank. They have banks in like Tasmania, and they are merging with Auswide. So this is a merger. Share price did get as high as $4.15 today, has pulled back to $4.02, but the chart actually looks pretty good. So I am trading MyState. So even though I don't like banks, I am still trading the smaller banks because there's value in these smaller banks, and they decided to merge. And if they do achieve some synergies, I hate that word, this could be an accretive merger between MyState and Auswide. And I do think the bigger a bank is, the better, more efficient it can run. So hopefully that is true for MyState, although I'm just trading it, so I don't really care for the longer term. What else do we have here? Janison. Janison was a bit of a talk of the investing community a few years ago, and the chart looks horrendous right now. I'm pretty sure it was. Yeah, 2021. Look at that. I still remember, just Janison. I got a lot of comments about Janison. Share price went as high as about $1.50, and now he's 21.5 cents. I just don't like education companies. It is one of my biases, and I don't think you'll be able to change that bias. I just don't like them. I just think they're at the mercy of the government. Government regulations can change at a whim, and that could affect any of these companies. It could affect them for the positive, sure, but for the negative as well. Lendlease, one of the lowest quality companies on the ASX right now. I am going to stand by that comment. In fact, the chart, this is the daily chart, has looked awful for a few years. Share price has dropped from $20 back in 2020 or 2019 all the way down to $6.30, and the share price is still in a downtrend. There's no end in sight to the downtrend. I have tried to trade this in the past unsuccessfully. Nuix, already talked about them. Media, had a quick look at these results, and down. The numbers were down. And the share price down a little bit, so probably expected. And the chart looks meh. What else? We have Reece, AVG, GWA. I'm pretty sure this does bathrooms, that sort of thing. Actually, not the worst looking chart, but if we didn't see this rise in share price back in the start of 2024, share price got to 285. If we didn't see that, and the share price was trying to get to a long-term high above $2.70, I would like this chart a little bit more. And then we have Iris. And last time I looked, Iris was flat. I'm also trading this too. Share price flat. Share price did get as high as $11 today, so I'm not sure why there was a little bit of selling, but yeah, I'm trading this. This actually does look like a pretty good chart. Would have been better if the market had a better reaction today, but that's okay. So I think that's all the financial results that were released today. I might be missing one or two, and I'm just going to have a look at one chart before I end this video. That's Bisalloy. Actually, I might do a comment or two. I have a little bit of time. Bisalloy still down. Oh, Bisalloy still. Oh, this is starting to look a little bit negative for Bisalloy still. Starting to look a little bit negative for Bisalloy still. So let's have a look at some of your comments. So David Race, hopefully I gave some okay explanations about why A2 Milk might have had an awful day today. I could be completely wrong, but yeah. Was it that bad? The market has spoken right now, but we saw with Audinate, the share price has recovered quite a bit. So there is a possibility maybe the market has overreacted, but I'm just thinking of valuation. TLX Pharmaceuticals, Shankstar says, multi-bagger this company. Thanks for sharing. You're welcome. Our pleasure. Say my pleasure. 100% return says DGL Group got a beautiful rounded bottom brewing, just needs a decent result, which should get with all the rain that was meant to be a drought. Expecting a blowout result. I do hold DGL right now. This is one position I probably should have sold, and I just went, no, I'm not going to sell this because I think this could absolutely explode as soon as they release any sort of turnaround announcement. Because the valuation right now, 158 million, and I think the share price and the market has really overreacted to this one. So this is a case where I'm just remaining patient, waiting for that good announcement. And unfortunately, if it doesn't come, then I could be waiting for a while. He mentioned rounding bottom brewing. It could be a while yet. So if you yeah. I think, yeah, even if it plays out with a rounded bottom, this could be just rounded bottom. But be careful because chart pattern. There we go. Here it is. Yeah, there it is. Little bit more, not as. Oh, how do we describe this? Maybe this one's better. Yeah, I'd sort of agree with 100% returns. It could look like that. Probably say it could. We're not really getting that right now, but it could look like that. But I wouldn't be surprised to see the company release a good announcement and the share price just takes off fairly quickly. So I'm just maintaining my position in this company because I do think there's value here with DGL. So thank you, 100% returns. Rahul Kahin, I botch your name more than likely. Rahul Kalyan. He had a brig. I'm going to read this myself. I'm not going to read this on the video because that's a long statement. And stocks under the hood. I agree with you all about this carry trade talk. The market is such an echo chamber at times. Yes, I think all it can take is one person to say it, and then everyone just flocks and says, "Yeah, that is what happened." And I have heard a few people, and these people, like one of them is a macro strategist, and I will listen to macro strategists because they have their pulse on everything. And this macro strategist said, no, it was not the yen carry trade. It was weakness in the American economic numbers that led to this weakness like 2 weeks ago. That is all it was. Now, he also mentioned the carry trade was a little bit, it sort of enhanced it, but it was not the reason. But for some reason, this yen carry trade, it could have been recency bias because it was fresh in people's minds. A lot of people just believe the down period in the market, that short period in the market, was because of this. But I just remember America released 2 days in a row really weak economic news. And those 2 days, the share price or the American markets tanked. Anyway, it frustrates me having to listen to so many people that had probably never heard of carry trade. I'd never heard of the carry trade. So then I had a read of it and I went, really? No. And then I thought, but this happened after the American markets already tanked. So remember, the big down day in Japan was the Monday. That was the day the American market started to recover. The bottom of the American markets was the morning that day, and then they started to recover. And they've been going up ever since. Suddenly talking about it like not only are they experts on the subject, but that is so obviously the reason for the market fall. How about Solvar for a name? Seriously, was it worth the change? Oh, okay. I was trying to understand what you're getting at. Yes, Solvar changed their name from Money, was it 23? Seriously, was it worth a change? No. I am not a fan of companies changing their names. Like Google went to Alphabet. Do you really need to change your name? I think sometimes companies change their name because the name itself has sort of a bad smell. People hate that name. Freedom Foods changed it to Newbie. And I'm pretty sure people hated the name of Freedom Foods because of what happened with that company. I sort of can understand that, but Solvar changing from Money 3. The other thing is I get used to knowing company by its name. I knew the company as Money 3, they changed the name to Solvar, and I sort of forgot about the company. Then I had a look at Solvar and went, oh, what's this company? Oh, they changed the name. It can lead to dissociation, our own dissociation with the company, particularly if we're not following it that closely. That has happened to me with quite a few companies. So I'd say, no, it was not worth the change. Now, in saying that, I think I did talk about Solvar, didn't I? Yeah, I don't need to talk about Solvar because I mentioned it on the other video. Yeah. So thank you, Stocks Under the Hood. James says ASL. For some reason, I thought this was, wait, the ASL? Andean Silver. It's a much better looking chart than Silver, the other Silver one. SVL, which one's this one? Silver Mines. Oh, Silver Mines looks terrible. So big difference between these two silver mine companies. I know nothing about Andean Silver. I'm assuming that you're on the money with Andean Silver. Okay. And this will be the last one from another comment from David Reece. Always find compelling information watching a Kneppy post. Well, thank you. All the books I read on investing are looking for value investments. Now, I will have to be honest with you. Most of the investing books I started reading way back when I started investing were value. I still consider myself to be a value investor because I still look for value companies. I still look for value. I'm looking at value because inherent in me is trying to buy companies when they're good value. That is inherent. But I have pivoted to not only looking for value investments, but also looking for growth companies that could be growing for a long time that may not be value right now. And I've bought quite a few of those companies, and also technical analysis. I'm using that more and more. But David Reece also enjoys listening to me talk about trading opportunities, makes for a world of opportunities rather than waiting for a once-in-a-decade opportunity. Yes, that's a really good point. Really good point, that there could be a company you love, but it's not value, so you just wait and wait and wait and wait, and that opportunity may never come. Or buy and hold forever. I'm not a big fan of buy and hold because if you go back 100 years ago and look at the biggest companies 100 years ago, probably most of them don't exist anymore. So we do get a turnover in the biggest companies. All the time. There's a constant turnover in the biggest companies. So buy and hold actually does not work over the long term. And forever, well, there's no such thing as forever. Not saying Rule 1 is a bad read. It's great, but I get a great deal from Kneppy. Always enjoy it. Thank you. Yeah, Rule 1. Is that Phil Town? I'm not a big fan of Phil Town, and the simple reason I'm not a big Rule 1. Yeah, Rule 1. I'm not the big fan of Phil Town simply because of something he said in a podcast once. So I used to listen to all his podcasts, and then he said in one podcast, the way I invest is the only way to invest. This is the only investing strategy that works. And I do think that is a dangerous thing to say because a lot of people, we're all different. And we have different strengths, weaknesses. And for you, whoever's listening to this particular part of this particular video, your strength could be completely different than mine. And what my strength is could be simply technical analysis, while you could be completely different. You could be great at talking to people, talking to management, finding these high quality companies just by doing that. That could be your strength. Maybe looking at financial statements could be your strength. Or maybe, who knows? There's a lot of strengths out there. So to say that there is only one investing strategy out there that works is dangerous. And to be honest with you, it's absolutely wrong. There are many ways to make money on the stock market, ways to increase your capital. There is not one. And I am glad that I have seen a few experts actually say that. But there's a few other experts who say, no, the way I invest is the only way to invest. And I'm going to end it on there, this video, because it's been going for almost 1 hour. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.